Welcome to the Personal Finance Podcast for Doctors. This podcast aims to simplify all aspects of personal finance and helps you make smart and informed choices about money so that you can live happier and stress-free lives. Today's episode is brought to you by Chanda, who is a financial coach and vice president with the doctor practice at MFA, the only company in India having a dedicated practice for doctors.
Hi, let's talk about the volatile world of investing once again today in today's episode. See, the lure of rising markets like we see currently is very hard to resist. Even the most conservative investors who are known for their prudence and patience find themselves caught in the seductive trap of chasing performance as markets rise. Now, I have personally seen some very astute investors succumbing to this as recent as a few weeks ago because the markets today are on a high. So what is this performance chasing? Performance chasing basically means that investors make their decisions and decide to go risky based on the recent returns that they have seen in the market, rather than on a balanced consideration of their personal financial goals, of their risk, of their returns, and the strategy that has been adopted. Now, there is a danger here which is twofold. Firstly, by the time these investors decide to shift their positions and profit book, they often end up buying at higher prices, which may lead to significant losses when the market corrects, as it inevitably does. Secondly, this strategy of performance chasing contradicts the very essence of wise investing, which is prioritizing long-term consistency and stability over short-term gains. But it's all psychology. And what's the psychology behind this? Well, there is a reason why even the conservative investors fall prey to this trend. And the answer lies in the psychology called the recency bias. Recency bias leads investors to believe that the recent trends will continue into the future, making high-performing investments very, very attractive. They look attractive, they're irresistible. There's social proof and media glorification of winning stocks and sectors, and that intensifies this bias. Investors start wondering if their current financial professional who has a steady, disciplined approach, because of them, are we missing out? Are we lagging? Recency bias further fuels this doubt. If everyone seems to be getting rich quick and the media is abuzz with stories of meteoric gains, it's tempting to think that I too want a fast track to wealth. And during such phases, there are some people who even think that they know much more than their financial professionals. The wise say that the biggest destruction of wealth is caused by mindless panicking and exiting. And the second biggest award goes to performance chasing. You decide to move into higher risk areas in pursuit of great returns. And thereby, you expose yourself to even more volatility, possibility of more losses, which your portfolio may not be structured to handle. Chasing performance typically involves frequent trading, and the costs associated with this high trading, like transaction fee, taxes, bid-ask spreads, this can significantly erode returns. Now, you need to avoid this trap because the trap's there for us. How do you do that? How do you avoid this trap? Number one, always align your investment choices with your financial goals, your risk tolerance, and your investment horizon. Regularly review these goals as a part of annual financial checkup. Number two, discipline. Implement and stick to a well-considered investment strategy. Now, this will include setting rules for when to buy, when to sell, systematic investment plans, establishing firm criteria for portfolio rebalancing, and so on. Number three, educate yourself. Understand the historical performance of markets during different cycles. It provides you perspective. It reduces the likelihood of making impulsive decisions based on recent events. And number four, partner with a top, real financial professional who will offer not only expertise but also emotional detachment. Someone who is proficient in not only helping you align your use of capital with what's important to you, but also get the magic of compounding to work for you. Help you stay invested across market cycles. Help you to avoid costly financial mistakes which happen during these volatile times. In the end, always remember, what matters isn't crossing the finishing line before anybody else does. But what matters is just finishing or reaching the finishing line, just crossing the line. Make sure you cross the line, and that's where your focus should be. Therefore, resist the fleeting allure of market highs. True investment wisdom lies in the quiet courage of sticking to your strategy, especially when temptation is at its peak. I hope you understand what I'm trying to say over here. Implement it. Take care of yourself. God bless you.
You were listening to the Personal Finance Podcast for Doctors with Chanda Verma. If you find this podcast relevant and interesting, do share it with other doctors as well. It will be great if you leave a review, share, like and subscribe. You could also let us know if there is any specific topic that you would like us to cover. For any queries or help, you can get in touch with MFA's doctor practice team at 892-800-6140.